Second. All right, what's up, Drew? So tell us what's going on, with mortgages right now. We're in, what's today's date? The 18th of November.
Today is November 18th,
2022.
And, to sweeten the pot for anybody that's potentially looking in the market, right now the rates are doing way better than they have in really the past couple months. We got some CPI data last week, and inflation is not as crazy as everybody was expecting.
Mm-hmm.
Therefore, interest rates had a great turnaround, and we've seen in some instances 3/4 of a point lower. So we're starting to see numbers back in like 5% range on some deals, if depending on what the actual product is,
Mm-hmm.
and what the term lengths are. But overall, it's good news, and this is good news for the economy in general. But overall, people that are looking for homes, rates aren't as crazy as they were, and it's good moving forward, seeing that data come out and seeing the rates move, because generally at this point everybody's going to be a little more optimistic,
right?
Meaning that rates are going to continue to potentially, might be nominally for a while, but start coming back down a little bit, and we might get out of this craze we've seen.
Yeah, so I know they were interest rates were up over 7%, and I think it was last Thursday, a week ago. Again, so that would have been like around November 9th or 10th.
Yeah.
Is when the data came out. The consumer price index was lower than what was anticipated, and some things I've been reading is that that's why the interest rates came down 0.6% on the average 30-year fix, which was a record for as far as
record day,
as far as they've been tracking it.
That's right.
And then as far as long term, some stuff I've been seeing is that if we see another consumer price index report like this next month, then that could be a sign that we may have seen the highest of the rates, and then, so we're back in the sixes right now. You're telling me, like today, what was your 30-year fix today?
30-year fix right now is 649.
Assuming good credit and all that stuff.
Yeah, assuming all the normal things, and then people that are looking at like 15-year, if they're wanting to build the equity a lot quicker, those rates are in the high fives, 5.75% range. So
is that purchase only, or is that purchase or refi?
Purchase refi,
okay.
Either one. So there's opportunities for everybody. Even if you're looking at jumbos, and of course jumbo rates or jumbo loan limits are up in the, I believe, it's $720,000 range now. So if you're looking for some of those maybe custom homes, stuff like that, pricing is actually better on jumbos right now, which is a complete change from what we saw last year.
Yeah, jumbo used to be on a higher price home like that. You might get a jumbo that was like up to in the 4s or the 5s, and then if you needed a bigger loan than that, you'd have to get a second mortgage, right?
Correct. Yeah.
So with the jumbo, they can get just one loan for that higher amount.
Yep, exactly. And again, the jumbo rates right now are lower than your standard conventional stuff. So it's just good news moving forward. We're going to hope to continue to see it move the opposite direction and make it a little bit nicer in pricing for everybody. But
yeah,
it's good news. It's good news. It's looking awesome.
Yeah. So yeah, the market has been. If you've been keeping up with anything I've been saying and just watching the news and watching the market and seeing what's going on, interest rates have been going up since I guess late June or so when they really started going up.
Spring is where we started to see the turn, probably April, May, and it's taken all of this portion of the year for us to finally maybe see a turnaround.
Yeah,
now.
Well, and home values went up so much too, just over the course of the past few years. They really started going up in the winter and spring of 2021 because we had this backlog. The market kind of slowed at the beginning of the pandemic, like in early spring of 2020. We kind of missed out on our spring 2020 market. So then around the summer is when buyers started to be more comfortable going into homes. And then it took a little bit longer before sellers were more comfortable having people in their homes and having more listings. So, and then there was such a backlog with people wanting to buy houses that we had all these bidding wars and everything. So that's what really drove prices of homes up. And homes have gained a lot of value. They really appreciate it a lot. And even if we probably started to see a little bit of a home price correction as well, which the interest rates going up has helped that in terms of kind of slowing the I guess you could call it inflation of home values, which is something that kind of needed to happen anyway. We kind of had to pump the brakes on that for a little bit because otherwise homes are just going to be unaffordable for people.
Yeah.
So I think we're going to be getting back into that area where interest rates maybe they end up being in the 5s or so, and that's what people get used to,
It's kind of back to where we had left off. You
Yeah.
know, things went crazy. They dipped, and we were in that 4 or 5% range. I think probably the benefit we're going to see is that a lot of people have built equity in the home, and the values are going to be higher, or had been higher, and it may take that dip, like you said, but it's still, you're going to have more equity in the home at this point than you would have years ago, with interest rates kind of back to where we had left them off, and things get back to normal.
There you go. Yeah. Cool. Well, hey, how can people get in touch with you?
All of my information easily can be found at bighamlendinggroup.com. I'm on Facebook. I'm on LinkedIn. Highland Mortgage page directly is highlandmortgage.com. I can be found that way. I am in North and South Carolina for sure. I live in Lancaster, South Carolina.